Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about HAEMONETICS CORP quarterly report. HAEMONETICS Corporation offers a diverse range of medical technologies and services to hospitals worldwide. Key business areas include automated plasma collection systems, donor management software and solutions, NexSys PCS, NexLink DMS, Donor 360, integrated information technology platforms for plasma, customers' medical devices for electrophysiology, critical care, neurocritical care, trauma, burn surgery, spine surgery, and cancer surgery guidewires and fiber optic sensor solutions, SavvyWire, OptoWire, hospital products, TEG, and has hemostasis analyzer systems, TEG Manager software, autologous blood recovery system, Cell Saver Elite Plus, VASCADE closure products, VASCADE 5F, VASCADE 6/7F, VASCADE MVP XL, VASCADE MVP. The decline in HAEMONETICS Corp's stock price over the past year can be attributed to several key events. The most significant factor was a mixed earnings report in August 2025, which led to an analyst downgrade from JP Morgan. Despite exceeding analyst estimates on earnings per share and revenue, the company's hospital and interventional vascular therapy segments underperformed due to increased competition and commercial pressures. The plasma segment's strong organic growth was not enough to offset these losses, leading to a sharp decline in stock price. The sustained losses continued over several weeks, with HAEMONETICS shares falling by 28.6% in less than a month. By November 2025, the company's share price had dropped by over 31% year-to-date. However, on November 6, 2025, HAEMONETICS stock saw a significant rebound after reporting better-than-expected second quarter fiscal year 2026 results and raising its full-year financial guidance. This suggests that the company is taking steps to address its challenges and improve its performance. The primary drivers of revenue growth or decline for the company can be summarized into several key areas. On the growth side, the acquisition of Attune Medical's ENSO ETM technology and the addition of esophageal protection product line through acquisition have contributed significantly to revenue growth. Additionally, strategic investments in Vivasure Medical Limited and revenue recognition from executed contracts have also driven growth. On the decline side, the plasma segment has experienced a decline due to unspecified reasons, as well as lower sales volumes in North America due to customer transition, CSL Plasma. The whole blood segment has also seen significant declines in sales volume. Overall, these drivers highlight the importance of strategic acquisitions and investments in driving revenue growth, while also emphasizing the need for companies to address challenges such as declining segments and customer transitions. Net income and profit margins overview. The company's net income experienced a mixed trend between Q2 2024 and HAEMONETICS 2025. In the second quarter of 2025, net income increased by $4,853 to $38,684 compared to the same period in 2024. However, for the first half of 2025, net income decreased by $511 to $72,715 compared to the same period in 2024. Profit margins also showed contrasting trends. The gross profit margin declined in both Q2 and HAEMONETICS 2025, dropping from 54% to 59.6% and 53.3% to 59.7%, respectively. On the other hand, operating income margin improved in both periods, rising from 14.9% to 17.9% and 13.4% to 17.4%. The reasons behind these changes are attributed to the increase in restricted stock issuance of $250,532 and a decrease in shares repurchased of $26,047, as well as a decrease in other comprehensive loss of $7,035, which contributed to an increase in net income. The company is indeed generating positive operating cash flow, as evident from its financial summary. The data on pages 12 and 48 of the report confirms this trend. Specifically, the net cash provided by operating activities has increased significantly from $21,402 in 2024 to $128,716 in 2025, indicating a substantial improvement in the company's ability to generate cash from its core operations. This positive development is a testament to the company's financial health and stability. The company's debt level and interest expenses have shown mixed results over the past year. While some instances suggest no significant change, others indicate an increase in interest expenses. For example, on page 28, interest expenses increased from $12 million to $4.3 million for the 3 months ended September 27, 2025. Similarly, on page 46, interest expenses rose by $15.9 million in 6 months ended September 27, 2025 compared to fiscal 2025. However, other instances suggest that debt levels have remained relatively unchanged or decreased slightly. For instance, on page 25, the total debt level remained unchanged at $1,224,728, September 27, 2025, vs. $1,224,788, March 29, 2025. Additionally, on page 46, the net debt position increased by a slight amount between March 29, 2025 and September 27, 2025. Overall, while there are conflicting information regarding changes in debt levels or interest expenses, it appears that interest expenses have shown an increase in some instances. The company's financial summary reveals a mixed performance across its segments and regions. On the positive side, the hospital business unit shown with strong growth in electrophysiology has viscoelastic diagnostic devices and hemostasis management product line. International markets also performed well, contributing 26.6% and 25.6% of sales. Outside the U.S., the apheresis segment saw a 3.2% growth, while blood management technologies experienced 13% and 13.6% growth in 3 and 6 months, respectively. Hospital net revenues also grew by 5.1% and 4.7% over the same periods. However, some segments struggled. The blood center business unit saw a decline of 17.8% and 19.5% in net revenues over 3 and 6 months, respectively. The plasma business unit experienced a decrease of 9.5% and 7.1% in net revenues over the same periods. Additionally, customer contracts and relationships led to an impairment charge of $8.6 million, while government-owned or supported healthcare systems in several countries faced poor performance due to payment delays and local economic conditions. Management's outlook and strategy. HAEMONETICS management is optimistic about the company's future prospects. They expect sales growth over the next 3 years following the acquisition of Attune Medical, which will complement their existing vascular closure product line. The company has also initiated a new share repurchase program to offset dilution from employee equity grants. Management is focused on strategic investments, including a €63 million investment in Vivazure Medical Limited, and expects significant revenue recognition within the next 12 months. They believe that plasma and hospital segments have the greatest growth potential and are well-positioned to drive long-term value. The company has sufficient liquidity to fund its cash requirements over the next 12 months and meet long-term needs. Management is also implementing a market and regional alignment initiative to improve operational performance, reduce costs, and direct resources towards high-growth markets. Overall, HAEMONETICS management is committed to achieving long-term strategic and financial improvement goals through product development, commercialization, acquisitions, and divestitures, while managing pricing pressures due to healthcare cost containment trends. The company has made significant moves through acquisitions and divestitures. Key acquisitions include Opsens Inc. and Attune Medical, which are highlighted on page 49 of the financial summary. On the other hand, the company has divested certain assets to streamline its operations. Specifically, it has sold the ClotPro analyzer system within the hospital business unit, page 18, and certain products in the blood center business unit, primarily related to whole blood, also page 18. Concerns about inventory buildup and supply chain disruption. The company's financial summary reveals 2 pressing concerns that warrant attention. Firstly, there is a significant inventory buildup issue, as evident from various points throughout the document. The presence of a $26.2 million long-term net deferred tax liability related to inventory with no tax basis, page 15, and an inventory buildup of $12,075 on page 16 are clear indicators of this problem. Furthermore, the company's supply chain is also at risk due to disruptions in raw material availability and pricing, page 50. The impact of public health crises, geopolitical tensions, and economic conditions in key regions such as China, Taiwan, Russia, Ukraine, the Middle East, and others pose a significant threat to the continuity, availability, and pricing of essential materials. These concerns highlight the need for the company to address these issues promptly to mitigate potential losses and ensure business continuity. That concludes the financial summary for HAEMONETICS CORP. Feel free to comment below, and I will be happy to answer them when possible.